Welcome to the Home Buying Club. Today I want to talk about an area that so many people fail to realize when starting the home buying process. A lot of times when you've made the decision that you want to become a homeowner, you want to purchase a home, you start looking at homes. And that's great because a lot of these homes are beautiful. Well, when you start looking at homes, you now start getting excited and you're thinking, this is the home that I want. And when you actually execute and do the process, speak with the loan officer, you realize you cannot afford what you've been looking at. So what I want to encourage and motivate each and every one of you to do today is to understand how much can you afford. So when it comes to how much house you can afford, it's very simple. I'm not going to overcomplicate this process. So you want to look at all of your household income. That could include the income from your job, which if you are a W-2 employee, if you get child support, it has to be consistent for at least 12 months. If you get SSI, which is called Social Security, what are your benefits? You want to add all these totals together. And when it comes to your income from your job, you can use your gross amount. That is the amount that you are paid before taxes are deducted. Now, when you have a total of this number, you want to take your number and multiply it by 43%. What is 43% of that number? Based on that number, you also want to have set to the side, how much are you paying in monthly expenses from your credit report? When I say from your credit report, what are you paying per month? So if you have a car loan, you have student loans, you have credit card, what is the monthly amount of all of those total? Now, once you have that amount, now you want to deduct that from that 43% number you have. What do you have left? And based on what you have left, that is the most your mortgage can be. And when I say your mortgage, that can also include taxes and insurance. Now, there are some areas where you can get an even higher debt to income ratio, but we're going to keep it simple at 43%. Now, when we talk about how much can you afford, if you now do this calculation and you realize the amount that you can afford is nowhere near what you've been looking at, then what can you do to increase that number? I'm going to give you a couple simple steps that you could probably take into consideration to get a higher amount that you can qualify for. The number one area that you can use to qualify for more house is to have higher credit scores. If you have higher credit scores, now you look a lot more stable, you look a lot more qualified to your lender, because the average person will typically go into the home buying process with the very base. And when you go in with higher credit scores, now you look a lot more attractive. Another area that will help you to qualify for more house is to have more reserves in the bank. Again, if you know you want to get a bigger house or a larger mortgage, you want to have more in your savings account or in your bank account, because that's really what they're looking at, okay? Do you have money set aside in the event that something happens? Because if your lender right now is looking at your bank account and you have $2,000 left, so if you close on a house and all you have is $2,000 left, that doesn't look very stable or attractive to them. But how about if you have an extra $10,000 or $15,000 in your bank account? Now you look more attractive, and they will eventually, some lenders will allow you to go up to 55%. That 55% could totally get you in front of the house that you want to be in. So those are the two most important areas that you want to address once you do this calculation and it shows that you don't qualify for the house that you want. You can definitely look at those. And then there's one last one that I'm also going to address. What can you cut from your expenses? Some of you may have excessive credit card debt. Can you get those credit cards paid off? You may have a car loan. Could you possibly get that car loan refinanced and reduce the monthly payment? So if you can go and look through those three areas and see where you can make the adjustment, now you may position yourself to now be able to qualify for that home loan and for that home that you've been looking at. But I definitely recommend that you first do the math, work through that calculation, which is take 43% of your household gross income, and based on that 43%, now subtract the monthly payments of all your expenses that's on your credit report only, okay? They don't care about your cell phone. They don't care about your car insurance. They don't care about your lights, and your internet, because those are going to be covered in that 57%. Remember, they're only allowing you to qualify based on 43%. So if you work those numbers, it will tell you exactly how much you can afford. And once you determine how much you can afford, now you can actively go out and start looking at homes in the price range that you know you qualify for, and it makes your home buying process a lot more easy and simple. And most of all, it makes it fun for you and your family. So, hope this has been helpful. I'll see you in the next video.